Welcome to the Transparent FX Academy. In this video, I'll speak about EURUSD. And as usual, to keep the video as educational as possible, first, I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. By the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is rejecting to the upside a quite strong historical monthly demand and support zone. In fact, what we can see is that from here in multiple occasions in the past, the market has already created massive rejections to the upside. Every time these rejections to the upside came with very strong institutional buying. And we will be speaking about institutional buying in just a few moments when we move to the commitment of traders analysis to see what institutions are doing on EURUSD. But for now, let's keep in mind that this area has been rejected to the upside aggressively every time, and that once more we just got another retest of this exact same level of historical demand and support, and the market is currently rejecting that exact same level again to the upside. And again, we're seeing the bullish momentum continue for several months, as happened already in the past when the market was testing that exact same level. Now, what we can notice is that in all this period, there is only one time in which the market broke below that zone, which was right here. And this move to the downside anyway ended up immediately being a fake breakout because the market broke back above it and continued respecting the level as support. So here on the monthly, let's keep in mind that the market is rejecting with strong bullish momentum, a historical demand and support zone to the upside with strong institutional buying, as we will now see in just a few moments. Let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, what we can notice is a clear example of a perfect inversion of trend. What we can see is that the market went all the way down here with the creation of weekly lower lows and lower highs, which is the definition of a downtrend. And then the market inverted to the creation of weekly higher highs and higher lows. So this is a perfect inversion of trend from weekly lower lows and lower highs to weekly higher highs and higher lows, with the inversion pattern in this case being exactly this double bottom here, which by the way was created exactly inside of that monthly demand and support zone that we have previously identified. What we can also notice now that we are in an uptrend here from a weekly standpoint is that the market is testing the previous high. Now, the previous high is the previous level of, in this case, weekly resistance, which is now turned support. Now, why is that level important? Well, in an ideal uptrend, that is exactly the level that you expect the market to respect, because in an ideal uptrend, you expect the market to create an impulse, a correction, a new impulse to the upside, so a new higher high. Then you expect the market to go and retest the previous resistance turn support. So you expect the market to go and retest the previous high and respect it as new support and create the next leg to the upside, therefore the next higher high. And that is exactly what the market is doing here. We have the previous high, and that previous level, which is previous resistance, is now turned support here all across that zone. And what you expect next is the continuation to the upside, so the creation of a new higher high here from a weekly standpoint. So let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, the situation is quite clear. What we can notice is that this is the important structured zone. This zone was acting as previous daily resistance from which all these previous rejections to the downside were created. Then the market with this impulse broke above that zone, and all that previous resistance was turned support here. So the market is currently retesting previous daily resistance turned support with good probability of seeing bullish price action being created away from this level. We can also notice that actually this is a confluence of support zone, because what we know is that after an impulse and a correction, if we want to measure the correction to find potential support zones, what we have to do is take our Fibonacci from the low to the high of the impulse leg, and this shows us, in this case, how we have the 0.32, 50%, and 0.618 Fibonacci retracements all lining up exactly inside of this area, therefore creating confluence of demand and support. And when we have confluence of demand and support, that increases the probabilities of seeing institutional buying inside of this area. Speaking about institutional buying, if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing on the euro and therefore already on EURUSD, because keep in mind that all currencies on the spot are traded against the USD, what we can see here is that with the last report, net positions have been increased massively. We went from 119k net positions up to 125k net positions. This means that with the last report, 3,696 shorts got closed from an institutional perspective and 2,389 longs got opened. This brought the overall longs from an institutional perspective to 258k compared to only 132k. Now, if we compare the current positioning with what we had in the past, we can see that we had a complete switch. We went from having a negative net positioning, so minus 64k net positions, which means that we had more shorts than longs from an institutional perspective on EURUSD, 230,000 shorts compared to only 165k longs. And now we're having the complete opposite, 258k longs compared to 132k shorts. So from having more shorts than longs to having more longs than shorts. This clearly reflects that institutions have been moving back to the bullish side for the euro, therefore to the bullish side for EURUSD, because again, all currencies on the spot are traded against the USD. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description so you never miss new updates. Now back to the analysis. So here, what kind of situation we have? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this level, fueled by institutional longing, completing this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all this free education and analysis that you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you go over to the Transparent FX Trading website, which you find linked in the description. And here you will have the possibility to gain access to all my courses, which range from the very basics of trading to the more advanced topics like building automated trading systems, building a portfolio of strategies, uncorrelated strategies, and much, much more using quantitative finance tools like the Quant Analyzer. So it's really something that you cannot afford to miss. You also have the possibility to gain access to my trading station software with the Telegram notifications integrations, one-on-one mentoring directly with me for any questions you have along the way, the COT data software, which you often see me use here on my YouTube videos. The program is also an all-in-one program, so you gain access to everything immediately, including all my strategies and EAs, and you also gain access to my entertaining trading show in which I share all my trades as they're happening. Here, you will see the presentation of each and every one of my strategies with the full historical backtest and presentations of the rules of the strategy. You also, as we were speaking about, have access to the live trading show. So essentially, every trade that is taken on my live account is automatically shown here in a very entertaining fashion as they're happening. So opened, closed, managed, so you can learn even more. And as you scroll down, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the registration process. So again, I really suggest you go and check it out. The link is in the description, and I will see you on your student dashboard. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.